Afternoon. Firstly, I would like to thank everyone for attending the event. Please take note of the disclaimer. So for today's presentation, I will start off by explaining very briefly on the Shariah screening methodology and share our view on how we think this event could potentially affect share prices of company. We'll also take a quick look at how Shariah stocks have performed under COVID-19, and we'll run through our view on the market as well as our topics. So under the Shariah screening methodology, for any stock to be considered Shariah compliance, the company will need to meet several criteria. And SC will look at both quantitative and qualitative aspect. So let's start off with the quantitative screening aspect. For the quantitative screening, you have to meet two criteria. One is the business activity benchmark, and the second one is the financial ratio benchmark. So let's start off with the business activity benchmark. So in order to meet the business activity benchmark, firstly, the company's revenue and pre-tax profit must not be more than 5% for the activities that are listed below. So the key one is conventional banking, insurance, gambling activities, liquor and liquor-related activities, pork and pork-related activities, and tobacco-related activities. So this is the first business activity benchmark that the company must comply. Also, apart from the earlier activity benchmark that I've disclosed, the second benchmark is the 20% and benchmark rule. So under this criteria, not more than 20% of revenue and pre-tax profit of a company should come from the following activities, which mainly are share trading, stockbroking, as well as rental received from Shariah non-compliant activities, in order to be considered Shariah compliant. If the company meets the business activity benchmark, it must also meet the financial ratio benchmark to qualify for the Shariah compliance status. Under the financial ratio benchmark, the conventional cash or debt over total assets of the company must be less than 33% of their total assets. Apart from this, the company will also need to meet the qualitative screening, where they'll look at public perception or image of the company's activities from perspective of Islamic teaching. So that's a snapshot of how SC screen for Shariah compliant stocks. So this screening are done on twice yearly, sometime in May as well as in November. Now, what happens if a Shariah compliance securities are subsequently reclassified as Shariah non-compliance? What happens is that SC guidance would be for the investors to dispose the stock within a month of knowing the status of the securities, assuming the security value exceeds or equal to the investment cost. However, investors will be allowed to hold on to the security if the market price is below investment cost. As such, at times, we could see share price of a company reacted positively when the stocks are included in the Shariah compliant list, and at times when the company were excluded from the Shariah compliant list, you could see share price being negatively affected because investors may need to sell the stock due to the change in the status. Now let's take a look at the current status of Shariah compliant security in Malaysian stock market. So currently about 77% of security listed in the main board as well as the ACE market is Shariah compliance. And if you look at which sectors actually have the highest Shariah compliant securities, they are basically the construction, the healthcare and the energy sector. For sectors that have the lowest Shariah compliant securities, they will mainly be your banks, which is categorized under financial services, your telco, as well as the consumer sector. Now, I want to do a quick analysis here to take a look at how the Shariah compliant stocks have fared during COVID-19. So this chart here shows you all the 30 stocks that are in the KLCI index. And what you can see is that for starters, about 19 out of the 30 stocks in the KLCI are Shariah compliance, and roughly they make up about 64% of KLCI weightage. Now, over here, we can see that year to date, which account for the COVID period, you can see that Shariah compliance stocks, especially the gloves, have done extremely well. Also, a lot of these Shariah compliance stocks are in the telco, utilities, in the plantation sector. They are not seeing a big impact from the movement control order due to COVID-19. However, you will see as well that those stocks that are not Shariah compliance, mostly in the banking sector, gaming, as well as Malaysia airports, they have been more badly affected by the COVID-19. So what we can conclude here is that basically Shariah compliance stocks have fared better during the COVID-19 period. So this next slide basically shows you the performance of the KLCI constituents over the last 6 years, as well as year-to-date change, where you can clearly see that it's the glove and the non-cyclical sectors that have performed well year-to-date. Now, if you look at the monthly performance of the key sectors in the stock market, you will find that the Shariah compliant index, basically FPM Hijrah as well as AMAS, have fared better compared to KLCI. So you can clearly see year to date, Shariah and AMAS Shariah index have been up about 6 or 7% and 3% respectively, whereas the KLCI is down about 2.7%. The Malaysian market has also outperformed its peers in the regional market. For example, it's outperformed the Thai index as well as the STI, as well as the Jakarta Composite Index. It also outperformed the MSCI Asia ex-Japan Index year to date. Now here we try to look at the performance, compare them against sectoral performance, and what we can see is that best performing sector year to date is the healthcare as well as the technology, whereas the worst performing sector year to date would be your cyclical sectors, meaning your oil and gas, property as well as construction. So if you look at the KLCI performance, we have seen KLCI rally from its year-to-date low by 21%, and it has recovered the loss prior to the movement control order. It's up about 20% since movement control order. We think that the rally in the stock market that we've seen so far is due to investors pricing in expectation of a significant recovery in corporate earnings going into 2021. We think the rally was also partly driven by liquidity from both the stimulus package as well as the reduction in OPR rate. As we mentioned earlier, the Shariah index have outperformed KLCI by about 10% and 6% respectively. And this is due mainly to the outperformance of the glove. In terms of interest, we see buying interest from the retail as well as the domestic institution. But we've seen continuous selling from the foreign investors. Outflow for foreign investors have been around 13.3 billion in the first 5 months of this year. This is much higher compared to the outflow that we've seen in 2019 of 11 billion. Now here, this chart basically shows you that since MCO, or you can see that it's in the month of April and May, the local retail share of daily trades have gone up to 35 to 36%. And foreign share of daily trades have continued to shrink, and now they only account for 19% of the daily trades in the month of May. So this chart basically shows you the blue bar, actually shows you the yearly net inflow and outflow of foreign funds. And what you can see is that for the first 5 months of this year, as we mentioned earlier, outflow from foreign funds has been about 13.2 billion, which is much higher compared to last year's outflow. So in terms of outlook, for the month of June, based on taking a look at historical data, we find that performance for the month of June has been quite mixed. If you look at it from a 10-year basis, we found that average month-on-month return is roughly about negative 0.3%. But if you take a longer term horizon, for example, the past 40 years, June has on average delivered a positive 0.6% month-on-month return over the past 40 years. We think the direction of the market will depend on first quarter result season. So far, we've seen about 66% of the companies under our coverage reporting results for the first quarter. And it's not very encouraging because about 40% of the companies reported results that were below expectations. We think the market will also be watching out for news flow on the COVID-19. They'll be tracking the daily increase in new cases. I think investors also will be following on the US-China trade war situation, as well as the crude oil price. Our view on the market in the month of June is that we think that given the strong gains, there are likely to be pullbacks due to profit taking for the market. And this could be potentially due to concern over potential second wave of COVID-19. Also, there are some concern about political uncertainty in the country. Our end 2020 KLCI target is 1449. That's based on 16 times PE multiples. We like sectors in the rubber gloves, oil and gas, and healthcare. We are of the view that Shariah investment strategy could outperform conventional in 2020, simply because the gloves have done well, and the sectors they are typically Shariah compliance, quite defensive, versus say those in the conventional like banks, which tend to be a bit more cyclical. So for our top Shariah picks, currently we like Tenaga, Inson, Pentamaster, Top Glove, Burmas, and DRB Highcom. So this actually shows you a list of big cap Shariah compliant stocks that are in our ad call. So big cap means market cap is above 2 billion. And what I've done is highlighted those stocks that have more than 29% upside under our coverage to our target price based on analyst recommendation. And among them will be Top Glove, Dialog, Inson, and DRB Highcom. So with that, I would like to end my presentation, and thank you everyone for their attention.